Hey there, welcome to the video. This is Beating the Market with Scott Welsh, and surprisingly enough, I'm Scott Welsh. Welcome. Today we're going to talk about the elements of a 100% system, and that usually gets people intrigued, fired up, angry. All sorts of emotions come when you talk about winning all the time, and we're going to go through all of those today. Let's get right to it. Three things we're going to talk about today: that magical, hypnotic allure of a high win percentage. We all want it, don't we? We're going to talk about it. Number two, but there is a downside, and it's mostly overlooked, the downside to winning all the time. But after we go through all the emotions and all the details, you may be tempted to say, yeah, mission accomplished. Is it though? Is it? Well, we'll talk about it. Now, first, a disclaimer. Always read the disclaimer. Never risk money you cannot afford to lose. But especially today, we're going to talk about a very, very hot button topic, a topic that gets people fired up or really, really interested. And understand that this is hypothetical information. I've done the research in recent weeks and months. I want to share this with you. It might be useful. It might be something you can use right away, but it's all hypothetical. This is not real information on real trades that I've taken. All hypothetical research, and it's important that you understand that. All right. That being said, let's talk about what we think of when you very first think of trading, when you just decide, this is something I want to do. Well, what are you picturing at that moment? At that very moment, are you picturing taking a stop out? I can't wait. I'm going to be a trader full time. I can't wait to watch that trade hit its stop loss. Because that's what we dream of, right? I can't wait to build a position and be a value investor and buy things on 50% off and over a 2 or 3 or 4 year period. Yeah, it'll go down and I'll see half or more of my account size dwindle, but that's the kind of trading I want to do, right? Is that what we think of? No, we think of winning. We think of, I'm going to put on this trade and it's going to double, or I'm going to run this robot and it's going to triple my account, or win, 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 win. That's what we think of. I mean, that's natural. I'm not criticizing, but we never ever think of losing. And because of that, we are drawn to the dream of winning all the time, right? So we get this bug, we get this itch, and we want to move forward. We want to be a trader. So then what do we do? Well, after dreaming of the riches and trading on the beach, that old trading cliche, we then start searching out, quote unquote, the system, the one thing that's going to change my life and bring me riches. Well, tell me about that system. That sounds intriguing. What exactly are you looking for? And when I say you, I mean me, because this is what I did back in the day. Well, the kind of system we look for is one that wins, right? Think about the times you're looking at systems. Again, using myself and my own journey. I want to find a system. Oh, I listen to a webinar, I read a book, and it's like, that system wins. I'm starting that tomorrow, right? Well, what happens in your books, in your webinars, in your whatever, and you find that very first system, right? You just started out on your trading dream journey. What happens when you see that first drawdown or that first losing trade? So long, Charlie, right? That system is worthless. That system is terrible. Why is it terrible? It loses. It lost a trade. Therefore, it is garbage. All right. So then you say, okay, next system. So you go to the next book or the next webinar or the next speaker, and you say, well, this system might be the one, but then it loses. So that's out. And then you look for another one and it loses, and that's out, and that's out, and that's out. And it just keeps going, right? We toss it out as soon as we see losers. I think we know that losing is part of the game, but we never, ever accept it. Oh, and this is what's worse. What if you buy someone's robot? I sell robots, just throwing that out there, right? I have robots that I trade. Sometimes people buy them, whatever. What happens when you trade someone else's system? I've done this too, and it loses. Well, that system is terrible. I am never trading that robot. That guy's a fake. That guy's a charlatan. That system is terrible. That's what I say or think about other systems that I've tried. That's what people may say about me. Heaven forbid anyone would say anything bad about me. But actually, you know what's interesting is that no one has ever said anything bad about me my whole life. Interesting. But anyway, if we trade someone else's system, as soon as that loses, we are out, and we may or may not post some insults online just for good measure, right? We are all searching for winners almost exclusively. We are so negative and critical to losers, to losing trades, right? I am no different, okay? I'm not pointing the finger. I gave up on one of the very first robots I ever made after being profitable. It was working. It was making money, and I bagged it. Why? It didn't win quick enough. It didn't win often enough. It didn't win to my satisfaction. It made money, but it didn't win, and I tossed it out. Can you believe that? That is embarrassing, but true. Right? We want to see winning trades when we look at webinars. When you come to a webinar, you want to see winning trades, right? You may complain, well, I cherry pick that, right? I may think that too, but we don't want to see the losers. I mean, what's the first thing you say to yourself when you see a loser? I know what I say. That system must not be very good. It's ridiculous. It's ridiculous to think that, but it's there. It's the hypnotic allure. We want our systems to win. So that all being said, that's what you're getting today, right? That's what the people want, and that's what the people are going to get, including me. But is it a good thing? Please keep that in mind. Is it a good thing? All right. We're not only going for a high win percentage, we're going for win all of the trades. We didn't come for some of the trades, we're coming for all the trades, right? Now, when someone gets on a webinar or any sort of video and says, or book, and says, I've got a 100% system, what are we told to do? We should run, not walk away from someone who claims they have a 100% system. You see this online, it's a Nigerian prince waiting to take your money. Remember that Nigerian scam, right? Those scams are still out there, and 100% systems are right there with it, right? A 100% system is a hoax. And I'm giving you one today. So, am I a hoax? Let's find out. Okay, we're going to look at the ES futures contract, which of course is the S&P, right? S&P 500. And it is a 100% system. I wanted a high win percentage. I got that and more, okay? We'll get to the dark side. Let's just talk about the winning for right now. We're going to use the ES. We're going to use a 240-minute chart. We're going to use indicators because I love them. And we're going to use a basic filter, right? And we're only going to go long. One of the things we need to make a high percentage system, one of the elements to a high percentage system is we need a directional bias, right? The market has a directional bias. The market goes up over time. That's what everyone tells us. And, right, it's pretty much true, right? It's pretty much true. If you trade something like Forex, there is no real directional bias. I mean, maybe in the direction of the carry trade. I mean, that's thin. It's very slim. Forex can go pretty much go either way in a violent, crazy, unending manner, right? So you need something with an upward bias. The ES gives us that, plus it gives us a little bit of leverage, okay? So keep that in the back of your head. Here is a recent trade from June 2017 on the ES, 240-minute chart. There's our filter. Anything above the filter is bullish. Anything below the filter is bearish. That's just basic common sense, right? So we're only looking for long trades, and to get that, price must be above the filter, the simple moving average. I'll give you those numbers in a second. We're going to use a basic indicator, the CCI, right? CCI index, the commodity channel index. Okay, we're waiting for that to get oversold. Once it closes into oversold, we are in at the open of the next bar. Closes into oversold, we're in at the open of the very next bar. That is it. As long as price is above the simple moving average, we're waiting for a close below. Boom, there it is, in at the open of the next bar. Now, the exits get a little bit tricky, just a little bit tricky. We're not using a set number on our exits, on our profit targets, and on our stops. We're using the average true range set to default, 14 periods. Okay? Here's the thinking behind that. We want to go for something in our targets and have a stop loss that's realistic to what's been happening lately. For example, what if we go for, I don't know, a $1,000 profit target, right? We want price to be above, and when it goes into oversold, we want to make $1,000. Okay. Well, $1,000 in crazy times, 2000 to 2002 or 2008, 2009, when things are really, really moving, it may get to $1,000 easily. I mean, we could have gotten a lot more. If it's been moving more than that for the last 14, 28 bars, well, that's not realistic to go for such a small target. Let's use something that's indicative of what's going on right now. So we'll use a bigger target. But if you just put in 1,000, then obviously you're just getting that no matter what the market condition is. And of course, vice versa is true. If it's a market that's not doing anything, if there's no action, if there's a lull, or we're waiting for some big event like an election or something else, and price isn't moving, it's unrealistic to try to say, get to $1,000. Well, what's that based on? Some arbitrary number? No, we're going to base it on, hey, the market hasn't been moving very much. Therefore, we're not going to ask very much for it, right? We're not going to ask very much from our target. We just want it to get to a place that it's been typically getting to for a while now, okay? That is kind of a big change. Normally, I just optimize for profits and stop losses. I don't worry about the ATR, but I've been doing some research into this lately, and obviously I just built a robot. You see that on your screen right now. So that is now in play. Okay, so this profit target, well, if we want a high win percentage, what's it got to be? Big or little? Little, of course. This is a multiple of the average true range. We're just taking, right? This is the average true range. This is what it's been doing on average in the past 14 bars. When price closes into oversold, we then look at the average true range and say, well, what is that right then? And let's say it's, 10 ticks, 10 points, 10 points, 10 points, okay? So let's say it's 10 points. We then multiply the average true range number by 0.8, by 0.8. So take 80% of whatever the average true range is there, right? So typically it's been moving about 10 points, 10 points, 10 points, right? You can see on the side it says 6. So it's, at this time it was a little less than 6 points, whatever. It's been going 6 points, 6 points, 6 points. We're just going to ask it to go a little bit less than what it's been typically doing. See, we're not even asking it to go for its average range. We're asking it for less. You see where we're going with this? Asking it for less than it's been typically doing, right? If you can do 40 push-ups and I ask you to do 30, that's no problem, right? Not a problem. We're not asking much from our profit target here. Thus, we can expect a high win percentage. So you take your average true range and you multiply it by 0.8, okay? And it gets that on your screen right there. And that's your winning trade, okay? Must be above, oversold, open on the next bar, and then we go for our very not quite 1 times the ATR, a little less than that actually. I'm going to pause now, let that sink in. Okay, I'm done pausing. Here are the details. We're using the ES. We're only going long. We need that upward bias. We need to have confidence in our upward targets. 240-minute chart, long term, but not too long term. Our CCI is set to a 24 length. We're making this higher than default. Why? We want less signals, but we want strong signals. We want strong signals, and it takes more for a 24 length to get into oversold. We want to feel good about the strength of our signals. And overbought, oversold is typical 100, negative 100. That's typical for the CCI indicator. Okay, that SMA, that simple moving average on the chart, was set to 40. This is set to 40. Anything above the 40 SMA, that's good enough for us. We'll go long. Profit target, as I mentioned, it's 0.8 times the average true range, set to 14. Now, there is a stop loss on this system, and that is the first time, honestly, I've ever had a 100% system that has a stop loss. Now, you may have found it. I get it. You're better than me. I'm just telling you that's phenomenal that you can have an emergency stop loss in place and yet we still win 100% of the trade. So we're not actually risking our whole account. I mean, what's the problem with systems that do win 100%? Well, they don't have stop losses. That's their 100% systems, right? I like those systems, but there's always the lurking danger of what if, what if, what if? What if it never, ever comes back? In this particular system, the difference is there is no what if. We don't have to worry about what if. We have a stop loss in place. So we take the average true range at the bar that goes oversold and multiply it by 10. So if it's 10 points, multiply it by 10, and our stop loss is 100 points away. Yes, there is a stop loss, and yes, it's massive. We're trying never to hit the stop loss because that is another element of a high percentage system. You need to have big stop losses or not use a stop at all. This does use a stop loss, and it's set to 10 times the ATR. Got it? So we're just going for little tiny wins. Well, if we do such things, what do we get? Well, here's the performance report. Over 19 years, 10 months, and 26 days, net profit on just trading one contract is $16,730. Comment more about that in a second. Definitely profitable, right? Definitely nice to have profit. Max drawdown is only $3,100. That is a very nice ratio of profit to drawdown. Very, very nice. And the net profit as a percentage of drawdown, divide that by that, it's 535%. That is awesome. It's over 5 times as much profit as drawdown. That is tremendous. Oh, look, let's look at our percent profitable, shall we? It's 100%. Big surprise. Now, we're going to get to some other things. Let me just throw this out at you. Over almost 20 years, we only have 72 trades. It's not a lot. Now, it's not surprising. 240-minute chart, filter. We extended the length of our CCI. So it's not surprising that this happened, but we need to know that it happened. There's only 72 trades. Okay? Well, let's look at that on an annual basis and see how that strikes us. Okay? First of all, no losing years, right? From 1999 to 2018, we never have a losing year. Almost every system in the world, 99% of the systems I've seen in the world have losing years. You want to be a trend follower? Multiple losing years. You want to be an index fund trader? You'll have multiple losing years. Everything has losing years, right? But a 100% system has no losing years, right? Because you win all the trades, right? 100% profitable over here. Now, here's a few things to notice. Look at the number of trades per year, especially from 2010. Not very many trades. Now we're getting to the hidden downside. If you're going to trade for a living and you want to win all your trades, you're going to have to live with not getting very many trades. What do you think about that? Furthermore, we have to be so picky We have to put the odds in our favor. We have to stack the probabilities extremely high to get this win percentage. And because we make our trades go through so many hoops, sometimes it doesn't have the energy to get through those hoops. And sometimes we don't trade at all for a whole year. Look, where is 2001? It's not an oversight. I'm not trying to trick you. It didn't trade in 2001. Didn't even trade. It never met the requirements. Of course, that makes sense. In 2001 was the crash of the internet stocks, and the market was down from 2000 to 2002. Not surprising that it didn't meet our requirements. I'm sure it was very difficult in those market conditions. Oh, but it also didn't trade in 2014 either, right? What happened in 2014? I don't really remember. Doesn't matter, right? It didn't meet our requirements. So that is another problem. You have to be picky to win all the time. And if you're picky, you get small numbers of trades and you get some years, whole years where you don't trade at all. How would you deal with that? You wanted a high win percentage, again, talking to myself too. Well, can you live with that if you don't trade sometimes for a whole year? How important is this topic? I'll answer for you. It's so important. Now, these numbers are small, and I apologize for that, but I wanted to show you. This is the trades list, and I just took a section of it, right? 2012. You can see that on trade number 55, we bought on August 22nd, 2012, and we made $180. You can see we entered at 1291 and we exited at 1295. So we got about 4 points, right? But remember when I talked all that time about average true range? We're only asking for what it's been doing. If you slide down a little farther to July 3rd, 2013, we bought at 1504 and we sold at 1510. So that's 6 points and we made 292. Back here, we only made 180. Over here, we made 292. That's going to strike you as really in one way or another. It's going to strike you as that is genius. Only asking for what the market has been giving is super smart. I'm going to put it in my trading system right now. Then do that. I'm glad that you enjoyed it and I'm glad you're using it. Or you can say, what the world am I doing? Right? Why not just go for the same amount every time? This is ridiculous. It's too much trickery, right? Why am I going to make 392 one time and 192? Maybe my 192 would have made 392 if I didn't put this parameter on it, right? I should go for 392 on all of them. These are the things that you have to think about when you're building your system. And if you want a high win percentage, well, what I'm showing you is that using average true range does give it to us. Would something else give it to us? Well, that's another webinar, isn't it? At possibly another time. So that's why I showed you that. If you're trading this manually, of course, I use robots almost all the time. But if you're trading this manually, then you'd have to do a little calculation as soon as price went into oversold. Not that difficult to do, but you would have to do it. All right, let's get some takeaways. On one hand, yes, we have done it. We wanted a high win percentage. Oh, we did that. We got 100% on our win percentage. Oh, and by the way, I have not mentioned this yet. All trading costs are built in. I don't like to show charts without trading costs built in. So we had a commission cost built in and slippage built in, all right? There's nothing chintzy about this particular research, right? Not at all. We have put our trading costs in. Anyway, so every time we put on a trade using these parameters, we win. But, and here's the dark side argument, how much do we really make? Yes, we win all the time, but sometimes we only make 2.9% in a whole year, right? Go back and look at the annual numbers, right? Sometimes in really down years like 2003, we wouldn't make very much money at all. And if you average all those out, without compounding, of course, it's only about 5% per year, okay? Yes, we got our 100%, but no, we're not making a ton of money. Now, And this same time period, these numbers beat buy and hold, right? These profit numbers are better than buying the ES and holding it in your portfolio all this time. It's better. It's for me, when you add in drawdown, it is a lot better. But in a strictly monetary sense, it's not that much money, right? We got our winners, but we didn't make that much money. And how much do we trade? Could you go a whole year and not trade? Could you do it twice? Could you trade twice a year? Could you do that? Most traders are action junkies. Could you go months and months and months without trading, right? Again, that's a dark side. But that's what it takes to get there. If we want that 100% system, if we want high percentages, that's what it takes. You can't have a ton of profit and a high win percentage. That, so far in my life, is a hoax. You can win a ton of money and have a moderate to low win percentage, or you can win all the time and make a little less money. These are the trade-offs when you're talking about a high percentage system. Bottom line is this: 100% systems are not a hoax per se, as long as they don't promise high profits and high win percentage, right? And now you have one, right? You have a 100% system at your disposal. I gave it to you for free, right? But remember, you have to give up a lot to get that win percentage. And the biggest things that we gave up is profit, right? I mean, we trade for profit to get that win percentage. We're going to have to give some up. That's tough, right? Keep in mind that systems that lose can make up to 10 times what we saw today, right? I mean, maybe not 10, well, maybe, right? They make a lot more. Bottom line is, we've seen systems that lose that can make a lot more, 5, 6 times more easily, right? We've seen that. And finally, are we willing to risk, right? We have a stop out there. What if the market gets crazy? It's worked through all these different market conditions up to now. What if it gets crazy and stops us out? That would be a huge hit. That would take a lot of trades to get that back, and it might even take multiple years. That's something that we have to keep in mind when we have big stop losses. But if you're willing to take a little less profit and all the stuff we have to take, we get a lot of winners. In fact, we may get all winners. But trading for a living doesn't mean necessarily winning for a living. And maybe our demands for all this winning, maybe we need to compromise on our demands. That's what this discussion is all about, right? But as I said, now you have a chart. You've got something that wins all the time. Happy to provide that for you. You just have to now make a big decision in your trading, all right? If you want more information like this, go to my email newsletter and sign up on scottwellstrategies.com. Love to have you on board. There's the contact information. I'll talk to you next time. Thanks for being here. Bye for now.